All right, let's talk about something that's a huge part of our financial lives, whether we realize it or not. Interest rates. It sounds complicated, but trust me, it's the one thing that can either cost you a ton of money or make you a ton of money. So let's break it all down together.
So here's what we're going to cover. First, what even is an interest rate? Then we'll look at the two sides of it, the not-so-fun part when you owe money and the awesome part when your money makes money. After that, we get to the really cool stuff, compound interest. And we'll wrap it all up with what you can actually do with this info.
Okay, first things first. What in the world are we even talking about when we say interest rate? Well, the simplest way to think about it is that using money isn't free. It actually has a price tag.
I know it sounds a little weird, right? Does money have a price? Well, yeah, it absolutely does. Think of it like renting something. When you use someone else's money, like a bank's, you have to pay them a little extra for the privilege. And that little extra fee? That's interest.
So at its heart, an interest rate is really just a percentage. It's the price you pay when you borrow from a lender, but it's also the reward a bank gives you when you let them use your money. It's the exact same concept, just viewed from opposite sides of the table.
Let's start with the side of the coin we're all a bit more familiar with, interest as a cost. This is what you see when you're thinking about a loan for a car, a house, or pretty much any big purchase. Okay, so let's compare two super common types of loans. With a mortgage for a house, the loan is secured by the house itself. That means if you don't pay, the bank can take the property. For them, that's low risk, so they give you a lower interest rate. A personal loan, on the other hand, is usually unsecured. There's nothing backing it up but your promise. That's a way bigger gamble for the bank, so they charge you a higher price, a higher interest rate. Makes sense, right? Now listen up, because this is probably the most important takeaway if you ever borrow money. You're going to see all these flashy low interest rates advertised. Just ignore them. The only number you need to care about is the TAG or the APR. Why? Because it includes everything, the interest rate plus all the hidden fees and extra charges. It shows you the real total cost of the loan, and it's the only way to truly compare offers side by side. All right, enough about debt. Let's flip the script and talk about the fun part, how interest can actually put money back into your pocket. This is where you make your money start working for you instead of the other way around.
You've basically got two main options here. A standard savings account is super flexible. You can pull your cash out whenever you want. The trade-off is that the interest rate is usually pretty low. Then you have a time deposit account, where you agree to lock up your money for a while. Because you're giving the bank that security, they reward you with a much higher guaranteed interest rate.
Okay, you ready for this? We've saved the best for last. This next concept is, and I'm not exaggerating, the most powerful force in all of personal finance. If you understand this one thing, you can build serious wealth over time.
Let's get this straight. Simple interest is easy. You earn interest just on the money you first put in. That's it. But compound interest, that's where the magic really happens. With compounding, you earn interest on your initial amount and on all the interest that's been piling up. It's literally interest earning its own interest. It creates this amazing snowball effect.
And hey, don't just take my word for it. They say Albert Einstein himself called it the eighth wonder of the world. Why? Because its power is it's almost hard to believe until you actually see it in action. So let's see it. Look at this chart. We start with 10,000 euros. This simple interest bar, it just grows steadily, predictably, same amount every year. Kind of boring. But now watch that compound interest bar. For the first few years, there's not much difference. But wait for it, and there it goes. As the interest starts earning its own interest, it just takes off like a rocket. That massive gap that opens up at the end, that is the power of compounding and time working together.
So what do we do with all this? How do we take these ideas and actually put them to work for us? Let's bring it all home and talk about what this means for your financial future.
Honestly, it all boils down to this. You have to understand interest to win with money. It's that simple. Now, when you're looking at a loan, you know to look past the ads and find the real cost with the TAG. And when you're looking at savings, you know that compounding is the secret sauce that can build your wealth. This knowledge is your superpower. It's what lets you protect your money and, more importantly, make it grow.
So I'll just leave you with this one question to think about. Take a quick look at your own finances. Right now, is your money working hard for you, or are you working hard to pay interest to someone else? Seriously, the answer to that question could shape your entire financial life.